If you've ever been audited by your state, you know the stress that comes with it. But for many taxpayers, the audit itself is not the biggest concern. The real anxiety shows up a few seconds later when a different question hits. Does this mean the IRS is about to audit me too? That fear is common, understandable, and often fueled by misinformation. So let's address the question directly. Will a state tax audit trigger a federal tax audit? And just as important, what situations actually increase your risk and which ones do not? Understanding the difference can prevent unnecessary panic and costly mistakes. The fear makes sense. State and federal tax agencies both review income, deductions, and compliance. From the outside, it feels like they are constantly sharing information and tracking the same taxpayers at the same time. But the reality is more nuanced than that. A state tax audit does not automatically trigger a federal tax audit. There is no automatic notification sent to the IRS just because your state audits your return. However, certain outcomes from a state audit can increase the likelihood of federal attention. That distinction matters more than most people realize. What the IRS is concerned with is not the audit itself. It is discrepancies. If a state audit uncovers unreported income, overstated deductions, or inconsistencies that affect your federal tax return, that information may become visible to the IRS, especially when the changes are material or require amended federal filings. Here's where risk increases. If a state audit results in changes that should be reflected on your federal return, and those changes are ignored, that can raise red flags. The issue is not the audit. The issue is failing to respond appropriately to what the audit reveals. That is how small problems turn into larger ones. The good news is that most state audits do not lead to federal audits. In many cases, the IRS never gets involved at all. When adjustments are required, addressing them proactively often reduces risk rather than increases it. Clear documentation, accurate amendments, and proper guidance matter. Where people get into trouble is thinking in extremes, either assuming a state audit means nothing or assuming it means disaster. Neither is true. Each situation depends on what was found, how it was handled, and what steps were taken afterward. That nuance is what protects you. If you're facing a state tax audit or have recently completed one, clarity matters more than assumptions. I'm Sammy Kim, a tax attorney who helps clients understand how state and federal tax issues intersect and how to respond strategically. If you want help understanding your specific situation, you can schedule a consultation and get clear next steps right now.